All right, so we've got a really interesting deep dive ahead of us today. We're going to be taking a look at this research, particularly focusing on trading insights, avoiding beginner mistakes. And, as someone who's dabbled in trading myself, I know how easy it is to kind of fall into those common traps early on.
Right.
So we really want to equip our listeners with the knowledge to kind of sidestep some of those painful lessons
For sure.
and really set themselves up for success from the get-go.
Yeah, and I think that's where, my expertise comes in. I really try to take these complex trading ideas and kind of break them down into something that's clear and actionable.
Exactly. I mean, it's all about giving people those tools and that understanding so they can approach trading with confidence.
Right, exactly.
So let us jump right in. The first big hurdle that we're going to tackle is overtrading.
Okay.
It's so tempting to think, right, more trades equals more profits.
Yeah.
But is that really the case?
Well, that's where the casino analogy, I think, really comes into play.
Mm-hmm.
Imagine you're at a roulette table and you're just placing bets on every single spin.
Okay.
Yeah, you might win a few here and there, but the odds are stacked against you.
Right.
And those losses, they can add up really, really quickly.
Yeah.
And trading too frequently, it can be just as risky.
It's funny you mentioned that because I think it's easy to get caught up in the excitement of the market.
Absolutely.
You feel like you need to constantly be in action.
Yeah.
And I think everyone's experienced this at some point. It's that fear of missing out, FOMO.
Oh, yeah, big time.
But this research really suggests that more is better approach can actually sabotage your success.
It really can. And the research highlights the hidden costs of frequent trading. Every trade comes with transaction fees.
Right.
And if you're not careful, those can eat into your profits.
Oh, for sure.
I think what's even more significant is the emotional toll of overtrading.
Okay.
You're constantly on edge. You're second-guessing yourself. You're riding this roller coaster of wins and losses.
Yeah, I can see how that would be exhausting.
It's exhausting, and it can lead to burnout.
Right.
And when you're burnt out, you're more prone to making impulsive decisions.
Oh, yeah. You're not thinking clearly.
Exactly. Those emotion-driven decisions.
Right.
And those rarely end well.
So it's not just about the financial costs.
Right.
It's about the mental and emotional strain as well.
Absolutely.
It sounds like trading fatigue is a real thing.
Oh, it is for sure.
So what are some concrete steps that someone can take to avoid falling into this overtrading trap? I'm thinking something like setting clear limits or boundaries.
Yeah, that's a great starting point. Yeah. One really effective strategy is to set a daily or weekly trade limit.
Okay.
So before you even open your trading platform, decide how many trades you're going to allow yourself to make and stick to it.
Okay.
Think of it as like creating a speed bump
Right.
to slow down your impulses.
That's a helpful way to visualize it for sure.
Yeah.
But what if you see a trade that just looks incredibly promising,
Right.
even if you've already hit your limit for the day? That takes serious discipline to walk away from that, doesn't it?
It does. And that's where having a predefined trading plan comes in.
Okay.
We'll delve into that a little bit later.
Yeah.
But the key takeaway here is that you should only take trades that fit your strategy.
Right.
If a trade doesn't meet your predetermined criteria,
Yeah.
let it pass, even if it seems tempting in the moment.
That's tough.
It is,
Not
but
that important.
it is, and remember, quality over quantity.
Okay, so it's about being selective.
Yes.
And waiting for those right opportunities.
Absolutely.
Not jumping on every trade that comes along.
Exactly. And choosing to sit on the sidelines doesn't mean you're missing out.
Okay.
It's a sign of discipline,
Right.
of waiting for the optimal moment to act. Successful traders understand that patience is just as important as taking action.
Okay, we've covered overtrading.
Yeah.
Now let's talk about another pitfall that can really derail even the most promising trading journey. Emotional trading. I'm talking about letting feelings like fear, greed, or even the desire for revenge dictate your decisions.
Oh, yeah. Emotional trading.
It can be a dangerous game.
It's like hopping on a runaway train.
Oh, wow.
It's headed straight for disaster.
That's a powerful image.
And unfortunately, it's a far too common scenario.
I bet.
Have you ever made a decision based on emotions that you later regretted?
Oh, absolutely. I once bought this vintage sweater just because I was worried someone else would snag it.
Oh, no.
Turns out it was more vintage than stylish.
I've been there.
I definitely let FOMO get the better of me there.
We've all been there. But when it comes to trading, letting emotions take the wheel can have far more serious consequences.
Right, because there's actual money on the line.
Exactly. And the research mentions traders chasing losses.
Oh, yeah, trying to make it all back in one go.
Exactly. Or making revenge trades after a frustrating loss.
Right. Right.
These are classic examples of emotional trading,
Yeah.
and they rarely end well.
So how can you keep those emotions in check when you're in the heat of a trading moment?
hmm
It must be tough to stay rational when real money is on the line.
It is, but there are some practical strategies you can implement.
Okay.
One of the most effective is using a stop-loss order.
Okay.
Think of it like a safety net for your trade.
All right.
You set a predetermined price
Mm-hmm.
at which you'll automatically exit the trade if it starts moving against you.
Oh, okay.
This helps to take some of the emotion out of cutting your losses.
So you're essentially taking the decision-making out of the equation when emotions are running high.
Right.
That sounds incredibly helpful. Are there different types of stop-loss orders?
You have your basic stop-loss order, which is triggered when the price hits a specific level.
Okay.
Then you have trailing stops, which move along with the price,
Interesting.
locking in profits as the trade moves in your favor.
Okay.
And then there are stop limit orders, which combine a stop loss with a limit order, giving you more control over the execution price.
Oh.
Wow, that's more nuanced than I realized.
It can be.
What other strategies can help traders keep their cool under pressure?
Another powerful tool is taking profits at predetermined levels. This helps you avoid getting caught up in the greed of chasing just a little more profit, which can often lead to holding on too long and watching those gains disappear.
It's like setting a clear target and
Yeah.
sticking to it,
Exactly.
rather than getting swayed by the ups and downs of the market.
Yeah.
That makes sense. I imagine discipline is a huge part of successful trading.
Discipline is absolutely essential. And sometimes the most disciplined thing you can do is step away from the trading screen altogether.
Okay.
If you're feeling overwhelmed, frustrated, anxious, take a break,
Right.
clear your head, go for a walk, do something completely unrelated to trading.
Take a breather.
Yeah, remember, this is a marathon, not a sprint.
That's a great point. It's easy to get so caught up in the intensity of the market and forget to take care of yourself.
It really is. Okay, so we've talked about overtrading, we've talked about emotional trading,
Yeah.
but there's another critical element we need to address.
Okay.
The importance of having a solid trading plan. It's like building a house.
Mm-hmm.
You need a blueprint before you start laying bricks, right?
You're absolutely right. Trading without a plan is like setting sail without a map or a compass.
Wow.
You might have a general idea of where you want to go,
Right.
but you're likely to get lost along the way.
Oh, yeah.
A trading plan provides structure and clarity, guiding your decisions and helping you avoid impulsive actions.
It's interesting because when I think of a plan, I usually picture this like rigid document.
Right.
But the source material really emphasizes that a trading plan should be more than just a set of rules.
Mm-hmm.
It's a whole mindset,
Right.
a way of approaching the markets with intention and clarity.
Exactly. It's about having a framework
Yeah.
that helps you make informed decisions, even when the market gets chaotic.
Even when things get crazy.
Exactly. Now, a well-structured trading plan
Okay.
should include several key elements.
Okay, let's break those down. What are the must-haves?
First and foremost, you need clearly defined entry and exit criteria.
Okay.
This means knowing exactly when to enter a trade based on your analysis and when to exit, whether it's to take profits or cut losses.
So it's about taking the guesswork out of the equation.
Exactly.
Having those decision points laid out in advance.
Right.
Well, that sounds like it could really help with emotional trading, too.
Absolutely. Next, you need to outline your risk management rules.
Okay.
This is all about protecting your capital and minimizing potential losses.
Right.
It should include factors like how much you're willing to risk on each trade, your stop-loss strategy, and how you'll diversify your portfolio.
So thinking about the big picture, not just individual trades.
Exactly.
It's about managing risk across all of your investments.
Right.
What else is crucial for a comprehensive trading plan?
You also need a position sizing strategy. This determines how much capital you'll allocate to each trade based on your risk tolerance and account size.
Mm-hmm.
There are various methods for calculating position size,
Okay.
some focusing on a fixed dollar amount, others on a percentage of your account.
Right.
Choosing the right approach depends on your overall strategy and risk appetite.
That's fascinating. I'm realizing there's a lot more strategy involved than I initially thought.
There is, yeah.
And it sounds like risk management is a core component of that.
It absolutely is. And finally, your trading plan should include clearly defined goals and metrics for measuring your success.
Okay.
What are you hoping to achieve through trading? Are you aiming for steady growth, aggressive returns, or something else entirely? And how will you track your progress towards those goals?
So it's not just about making money, it's about defining what success looks like for you as a trader.
Exactly.
That makes a lot of sense. It's like having a roadmap and a destination in mind,
Right.
rather than just wandering aimlessly through the market.
Exactly. And the beauty of a trading plan is that it's not set in stone. It should evolve alongside your trading journey.
Okay.
As you gain more experience, refine your strategies, and understand your strengths and weaknesses, you can adjust your plan accordingly.
So it's a living document,
Right.
constantly adapting and improving. I like that idea.
Yeah.
It takes the pressure off feeling like you need to have everything figured out from the start.
Precisely, think of it as your trading companion,
Oh, I like that.
constantly learning and growing along with you.
We've covered a lot of ground here.
Yeah, we have.
We've explored those major pitfalls, overtrading, emotional trading, and the absence of a trading plan.
Right.
It seems like having a solid grasp of these concepts is crucial for navigating the markets effectively.
Absolutely.
What would you say is the most important thing to keep in mind when starting on this trading journey?
If I could offer one key piece of advice, it would be this: don't rush the process. Trading is a journey, not a destination. It takes time, dedication, and a willingness to continuously learn and adapt.
Right.
Focus on building a solid foundation of knowledge, developing a disciplined approach, and mastering your emotions. That's the recipe for long-term success.
That's such a valuable reminder. It's easy to get caught up in the excitement of the market and the allure of quick profits,
Yeah.
but building a sustainable trading approach requires patience and persistence.
Exactly. And don't be afraid to seek out resources and guidance. There are countless books, courses, and mentors available to help you along the way.
And speaking of guidance, this deep dive is designed to provide you with those key insights to help you avoid some common mistakes and set you on the path to becoming a more confident and successful trader. Now, before we wrap up, I want to leave you with the thought-provoking question, something to really consider. As you move forward, the source material touched upon the psychological aspect of trading, and I think it's a crucial element to acknowledge.
I agree. Understanding the psychological factors that influence trading decisions is essential for success.
Thinking about those three common pitfalls we discussed, overtrading, emotional trading, and the lack of a trading plan, which of these do you think you're most susceptible to given your own personality and tendencies?
That's a fantastic question. We all have our own unique strengths and weaknesses, and understanding those can be incredibly valuable in developing a personalized trading approach.
Exactly. So once you've identified your potential pitfalls, what specific steps can you take starting today to avoid them? Maybe it's setting those daily trading limits, creating a detailed trading plan, or practicing a mindfulness technique before each trading session.
Self-awareness is key. The more you understand your own tendencies, the better equipped you'll be to navigate the challenges of trading.
So to our listener out there embarking on this exciting, sometimes daunting world of trading, remember, knowledge is power, preparation is key, and discipline is your superpower.
And never underestimate the power of continuous learning. Embrace the journey, stay curious, and keep refining your approach. The markets are always evolving, and so should you.
That's a fantastic note to end on. Thanks for joining us on this deep dive into the world of trading. We hope you've gained valuable insights to approach the markets with confidence and avoid those common beginner traps. Happy trading.
It's been a really great discussion. I always find it fascinating to explore these core principles, especially for those just starting out.
Yeah, me too. And it's so easy to get caught up in the technical stuff of trading, but understanding the psychological side is just as important.
Oh, absolutely.
I remember when I first started dabbling in the market, I made a classic rookie mistake.
Oh, really? What happened?
I had this hot tip on a stock
Oh,
that was supposed to just skyrocket.
okay.
And I didn't do much research. I just jumped in head first, just driven purely by FOMO.
Oh, yeah. The allure of the hot tip. It gets a lot of new traders.
Oh, it definitely got me.
Yeah.
Needless to say, the stock didn't quite perform as promised.
Oh, no.
I ended up taking a loss and, learning a valuable lesson about emotional trading
It happens.
and the importance of due diligence.
Yeah. It's a tale as old as time in the trading world.
Really?
Oh, yeah. But, the fact that you recognize the mistake and learn from it, that's a sign of growth.
Okay.
That's what separates successful traders from those who struggle.
That's reassuring to hear.
Yeah.
It definitely reinforced the importance of having a clear trading plan
Absolutely.
and sticking to it no matter how tempting those hot tips might seem.
Yeah. And remember, even experienced traders make mistakes.
Oh, I'm sure.
The key is to view those mistakes as opportunities for learning and refinement.
That's a good way to look at it.
Yeah.
So speaking of learning, our deep dive today has been all about equipping you, our listener, with the knowledge and insights
Right.
to navigate the trading world with more confidence.
Exactly.
We've unpacked those common beginner mistakes and provided actionable strategies to help you avoid them.
And remember, trading is a continuous journey of discovery.
It is.
Stay curious, keep learning, and never be afraid to adapt your approach.
Right.
The markets are dynamic, and so should your strategies be.
Well said. We hope this deep dive has been helpful, giving you a solid foundation